Hey, welcome back to Lunch at the Market. Today is a beautiful day with the markets up nicely around 0.5% across all the major averages. What are we talking about today? The VIX. The VIX is incredibly low. If you take a look at the VIX, and we're going to pull up a chart right now of the VIX, that's just VIX. That's the Chicago Board of Exchange Volatility Index. This thing has been crushed. Should have sold call spreads when it hit 30, just so you know, and you can be ready for next time. If the VIX sees 30 again this year, we're going to sell out of the money call spreads on the VIX. Every time the VIX has gotten up to that level, it usually indicates that people's rationality has gone out of the window and fear is basically running rampant. Their emotions have overtaken their logic, and so they're just, right, people are trading wildly. Every time the VIX has got there recently, it's sold off. And it looks like if I draw a line of resistance along, right, it looks like 23, right, on the VIX is about usually where it tops out. I'm looking at the last 6 months chart, and all I did was drew a line across every place in which the VIX touched. So October 2010, the VIX touched 23 and then failed, subsequently traded down to 18. The VIX touched 23 again right at the very end of November and then failed and again traded this time all the way down to 16. The VIX had a run up to 20 and failed. It went back up to 20 at the end of February of this year and then again subsequently failed, traded back down to 18. This time, it's called an island reversal. The VIX shot up above that $23 resistance, traded there for a couple days, traded extremely poorly, and then traded back down below that level that was previous resistance, and again headed back down towards. It's actually broken that $18 level where it settled before and looks to be headed back down to 16. So, with that being said, it's probably now time to put on your hedges again. We sold out of the VIX call spreads. At least we got you out of the call spreads right on the highs. Ideally, what we would have done is got out of the long call spreads that we were long, which were in the money for Mays, and then flipped that around and then sold upside call spreads against the VIX and then covered those now with the VIX just getting absolutely crushed. So if you're on Trade Monster, right, so at Trade Monster, there's a link on our website. Just go to Investor Tools under Investor Education, and then you'll find a link to Trade Monster. Click on that link. You can trade VIX calls and puts directly on the index, not the VXX, it's not an ETN or an ETF. You can literally buy calls and puts on the VIX index on Trade Monster. So just type in VIX, bring it up. We're going to take a look at the options. I probably want to go back out to May simply because we want to cover sell in May and go away. So we're going to take a look at probably buying the at the money, which is the right around the 18, and then we'll sell the 21 or the 24. I'm going to take a look at that. You can price it either way. It depends on how much you want to have in the trade, but take a look at that. Either the probably the 17-21 call spread, which is what we did before. It worked out well. We were up about 45-50% when we took those things off. It provides a really nice hedge for you. You won't get the full bang for the buck, meaning unless you can get the VIX to be right where you want it to be on expiration, you'll never collect that full $4 for the $4 wide spread. Normally what we do is when we have a long spread, we buy it, it's totally in the money, and we just simply wait for time value to come out and volatility to come out, and then we're just going to let the whole structure get called away. So $5 wide spread, like we're long some Caterpillar 70-80 spreads, which are clearly in the money, and we'll just simply wait for time to expire. The spread will be worth $1,000 a piece, and we'll let it get called away. There's no maintenance on that trade. The VIX, because of how wildly it trades, especially in this environment with tons of macro data and news coming at you in your portfolio, the best thing to do is you put on your hedge in a time like this. The markets have just rocketed. I mean, the S&P is basically up 60 points from the lows of where we saw recently. It just rip-rocketed to the upside. So what we want to do is go out and buy these VIX call spreads the next time we see all this bearish selling, and we either test probably 1275, or if we break that, certainly if we break that, then you want to blow out of those VIX call spreads when the VIX trades above 23. Remember, that's that level of resistance that it keeps bumping its head up against. Okay, so that's how we're going to trade the VIX. So get your long call spreads now and look to blow out of those suckers around 23 in the VIX. Okay. Next thing up on our list, BVN. Gosh, what a terrible stock, right? We have looked and looked and looked for news as to why BVN is down $2.20. I mean, it is getting taken out to the woodshed. Thankfully, we got rid of some of our short put spreads last expiration. We should get rid of some more. We're short at the 40, so we still have $4 of cushion, but we sure felt a whole lot better when the stock was trading around $46 than $43.85. We're going to take a look into that. One of the things that we did talk about was actually bullish BVN, so we'll put that piece out just in case somebody's spreading fear and dumb rumors and things like that. We'll go ahead and pull insider selling to see if there's any funny issues there. I know that recently the chairman of the board of directors retired, but the guy's a 90-year-old billionaire. I'd retire too if I was 90 years old and a billionaire. At least get 1 or 2 good years in there before you have to worry about the end of your life, right? So there shouldn't be anything material in BVN, but we'll check into that for you. Just check out the stream. Follow us at MO Financial. That's M as in Magnum, O as in Opus, Financial. If you can't spell financial, we have bigger concerns than being able to follow us on Twitter. All right, so the next thing, BAC. Look, I would not try to be a hero in Bank of America. We're along January of 2013 in the money calls, and so there's really no impetus for us to take big action here. We probably should have exited the trade closer to $15 a share, but we're really not that quick. Very rarely do we flip in and out of things. We usually set a time horizon for our trade, and then we wait for that to play out. So what we'll do is we'll take a look at Bank of America. If it gets any closer to 12, we're going to start selling put spreads against it to try to protect or hedge against our long position. When volatility and fear kicks up and the stock sells off, we like to sell put spreads against our long positions to bring down the cost basis. Then by the time we get to 2013, we could really care less what the stock does because we'll have sold enough put spreads against it all along the way over the couple years that what happens to Bank of America at that point will be irrelevant. That's how we like to trade. We call it defending our position, right? So we have a long position. We defend it when things look ugly by selling put spreads against it when the Bollinger Bands get huge, right? That shows you a measure of volatility. When volatility explodes and you can get great premiums for those puts, then we sell those then. We wait for volatility to get sucked out, and then we make money by that. Even if the stock really doesn't do anything, when volatility gets squeezed out of those options, we make money. Okay, I think that's it for today. We covered our VIX, we covered BVN, we covered Bank of America. So don't try to be a hero. Now, if Bank of America breaks $13, and it's $13.45 right now. If it breaks $13, then you can look to enter the trade from the long side because below $13, we do believe there's some support down there. Keep in mind that Bank of America's earnings will be coming up. I believe they are one of the companies that reports on April 11th. You have to go back and check out that lunch at the market. Just type in MO Financial and BAC in the YouTube search bar. You'll find out the last time we talked about Bank of America, and it is April 11th that Bank of America reports earnings. And those are good. If Brian Moynihan comes out, reassures investors. Obviously, the sell-off has happened because they were not allowed to return a dividend to shareholders. They got denied that when the stress test was done most recently, while other banks were allowed to return capital to shareholders. Clearly, JP Morgan is a better bank. We'll say that right now. But we're not in Bank of America because we think it's the best bank. We're in Bank of America because of a recovering consumer, recovering housing market, recovering mortgage market, and they are incredibly leveraged to an improving economy. Incredibly leveraged. Their normalized earnings power is quite large, several dollars a share. Even if you put a 10 multiple on a bank with $2 of earnings, you can see this stock trades a whole lot higher, right? It would be around $20, and we're talking with a 10 multiple. So no growth whatsoever, 10 times EPS at $2, it gets the stock a lot higher. So those are our thoughts today. Thanks for joining us again today on Lunch of the Market. Enjoy your weekend. Sell something. Just find something that's really green on your screen and hit the sell button. Take a little off. Pad that cushion. We're going to start buying our hedges back, and then look for earnings season coming up shortly. Have a great day. Don't forget to check out America's Favorite Traders on iTunes. Find it by searching for America's Favorite Traders. Have a great day. We'll see you on Monday.